Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within corporate filings. Today we're diving into some interesting updates from CPG Carlyle Commitments Fund LLC, and let's just say it involves a bit of a shuffle in who's calling the shots and a name change that might make you do a double take. Alright, first up, this filing is essentially an update to their ongoing registration statement with the SEC, the official watchdog for publicly traded companies. Think of it as a company giving the government a heads up on some important changes. This particular filing is dated July 2025, so we're looking at pretty recent stuff. The company we're looking at is CPG Carlyle Commitments Fund, LLC. Now, the name might sound a bit familiar if you follow investment news relating to the Carlyle Group, but as this document makes very clear, Carlyle Group itself isn't actually an advisor or behind this specific fund. They're not sponsoring it, selling it, or promoting it. This is an important distinction to make right off the bat. The main purpose of this document is to let everyone know about some important changes. It's a supplement, meaning it adds to or modifies information that was already shared. And the big news here is a change in their investment committee and a rebranding of their management company. So what's changing? Well, the company that manages this fund, which used to be called Central Park Advisors LLC, is now officially Macquarie Wealth Advisors LLC. It's a name change, but it's important because all the previous references to the old name in their main documents are now updated to the new one. But the more dynamic change is happening on the investment committee. This is the group of people who make the key decisions about where the fund's money goes. Some familiar faces are staying put. Wandy Ho, Alex Lee, Charlie Spiller, and Bing Wong are still on board. But there's a new member joining, Robbie Burns, and on the flip side, Graham Conway is leaving the committee with his name being removed from all the fund's important documents by the end of July 2025. Let's get to know Robbie Burns a bit. He's currently the head of solutions at something called MAM, which seems to be a division within Macquarie. He leads a global team that handles a lot of different investment areas, from systematic investments to wealth solutions. He's also on the executive committee and plays a role in corporate development, focusing on how the company might grow through acquisitions. His experience isn't just limited to one area. He's already serving on investment committees for other parts of the Macquarie business, specifically in their secondaries business, and sitting on the boards of several wealth solutions entities. This tells us he's not new to investment decision making or corporate governance. Before his current role, Robbie Burns was the head of corporate development for MAM. In that position, he was crucial in shaping and carrying out the company's strategy, with a big emphasis on buying other businesses or making strategic investments. This kind of experience is valuable because it shows he understands how to grow a company beyond just its day-to-day operations. His career path also shows a solid background in finance. He came to Macquarie from Ashmore Group, and before that he was at UBS Investment Bank in their financial institutions group. This means he's got experience working with major financial players and understanding how different parts of the financial world connect. Academically, he holds a Bachelor of Commerce in Finance with honours from Queen's University, which is a respectable degree. These pieces of information about him paint a picture of a seasoned professional moving into a key role on this fund's investment committee. Now, there's a table in here that's quite interesting. It shows how much money the investment committee members are managing in accounts other than this CPG Carlyle Commitments Fund. This gives you a sense of their overall experience and their involvement in other investment vehicles. Looking at Robbie Burns specifically in this table, it shows none for registered investment companies, pooled investment vehicles, and other accounts in terms of the number. And for assets managed, it lists NA1 across the board. This footnote clarifies that as of June 30, 2025, Mr. Burns didn't personally manage these types of accounts listed in the table. However, it also states that starting July 15, 2025, he joined the investment committee not only for this fund, but also for the Macquarie-focused Access Fund LLC. So while the table shows his situation before these new roles, the text confirms he's now actively involved in managing other areas. Another quick note here, as of late June 2025, Mr. Burns didn't have any personal investment, meaning he didn't own any units of the fund. This is pretty standard for new committee members. They usually come in and then potentially invest later or have their stock ownership disclosed as part of their ongoing duties. So to reiterate and wrap up the core changes, the advisory firm has a new name. It's Macquarie Wealth Advisors LLC. And along with that, Robbie Burns is joining the investment committee, bringing his experience to the table. This filing also reiterates that the fund's units or shares are not registered under the Securities Act of 1933. This means they're not being offered to the general public in a typical stock market way. Instead, they're being sold through private placements and only to accredited investors. Accredited investors are basically individuals or entities that meet certain income or net worth thresholds, meaning they're considered financially sophisticated enough to handle the risks of private investments. This is a really important point for anyone looking at this fund. It's not for everyone. You have to be an accredited investor, and the document is very clear. This isn't an offer to sell anything. It's just providing information. And here's a big warning sign. The fund is an illiquid investment. Investors have no right to require the fund to redeem their units. Illiquid means it's hard to sell quickly. Unlike stocks on a public exchange, you can't just decide to sell your stake and get your money back immediately. You generally have to wait for specific periods or for the fund to sell its underlying assets. This is a major risk for investors. The filing also talks about where the company's records are kept. It mentions that companies like SS Kester C Technologies and Alpes Fund Services are acting as administrators and holding some of the fund's financial records in places like Kansas City and Denver. Meanwhile, the actual manager, Macquarie Wealth Advisors, LLC, keeps the rest of the important books and records at their New York address. This is just standard operational stuff showing who handles what when it comes to the company's administrative and financial paperwork. This is a snapshot from March 31, 2025, showing the number of people who hold the fund's shares. There are 3,380 holders of Class A units and 2,625 holders of Class I units. That's over 6,000 investors in total. Given that these are private placements only for accredited investors, having that many holders actually suggests a decent sized, though exclusive, investor base. The document references other exhibits like their code of ethics. This is basically a set of rules for the company and its employees to ensure they act ethically and avoid conflicts of interest, especially when dealing with investments. It's good practice for any investment firm. Finally, down at the bottom, we see the signature page. Alex Lee, listed as president, has signed off on this amendment on behalf of CPG Carlyle Commitments Fund, LLC, on July 15, 2025. This is the formal sign-off to officially submit these changes to the SEC. Now let's put on our investor hats and think about what this all means. The name change from Central Park Advisors to Macquarie Wealth Advisors, LLC, is primarily a branding move. It signals a potential shift in identity or alignment with the broader Macquarie Group. The addition of Robbie Burns to the investment committee is interesting. His background in corporate development and his involvement in other Macquarie investment vehicles suggest he brings a strategic and possibly growth-oriented perspective. It's a positive sign that experienced individuals are being brought into key decision-making roles. However, the emphasis on this being an illiquid investment where investors have no right to require the fund to redeem their units cannot be overstated. This isn't a quick way to make money. Investors need to be prepared to tie up their capital for an extended period, potentially years. They lose the flexibility they'd have with publicly traded investments. The risk here is that if an investor suddenly needs cash, they might not be able to get it from this fund, and they could be forced to sell at a loss if they can find a buyer at all. The fact that it's restricted to accredited investors means the fund is targeting a specific wealthier demographic who can absorb potential losses. This also means fewer potential investors, which can make raising capital a slower process. From a high level, this filing doesn't reveal any dramatic financial performance figures itself, as it's more of an operational and structural update. For investors, the key takeaway is understanding the nature of the investment, its illiquidity and limited access. The changes in personnel and management company names are secondary to the fundamental risk profile of the fund itself. It's a bit like changing the paint color on a house that's known to have a leaky roof. You need to address the fundamental issues first. In this case, that's the illiquidity. So to sum it up, CPG Carlyle Commitments Fund LLC is updating its management and leadership, which is normal for a fund, but prospective investors need to be acutely aware of the illiquid nature of this investment and the fact that they can't just pull their money out whenever they want. It's for the long haul. Alright, that's our breakdown of this filing. What's your take on these changes and the nature of this fund? Do you think bringing in someone with a corporate development background is a good sign for growth, or does the illiquidity pose too much of a risk for you? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and don't forget to subscribe for more deep dives into corporate filings. Also, check out our Discord community linked in the description for more discussions and exclusive content. Thanks for watching, and we'll see you in the next Decode.